I'd like to introduce Phillip Sindel. Phillip, as you know, is the president of Olmstead Associates, a company that's been working with us extensively in North America. Phillip, it's really important for me to get an insight because I know that you're speaking with a lot of clients at all times and consulting with various investment management companies. What are the trends that you see emerging from these conversations and from your consulting practice? And the trends that you see now and how you expect those trends to evolve and which ones you see developing and how they develop over the next 5 years. So it's a big question, but it's around emerging trends.
Yeah, it is a big question because there's so many things now that are going on that are up in the air as to exactly where the stones will fall, if you will, or the dust will settle, as they use the phrase. I think the first trend to talk about is what I would call the enterprise trend. A lot of it is being driven by regulatory issues because, of course, out of the last crisis, people talk about enterprise risk. People didn't understand what their enterprise risk. One part of the organization didn't talk to the other part of the organization. So I think one big trend is around the whole notion of the enterprise as opposed to the typical silo or product look that the industry has had for many years. This trend extends itself. The challenge with this trend is it's easy to talk about, but it involves so many layers of the company, it is difficult to execute. One of the things we try and do is make our clients aware of all the impact an enterprise level decision will have to minimize the risk, what we call the risk of execution. Because of course, the minute you talk enterprise, of course, the first thing everybody thinks about is data.
Correct.
You know, being able to look at data across the enterprise, being able to aggregate data up. When I started in the industry, unfortunately, I have to say about 40 years ago, this morning there was a session where they talked about legacy systems. I think I'm the human version of that. You know, there was always a question out there. How much do you own of, let's say, IBM stock? And tell me exactly where you own it within the enterprise. And that was always a special project.
Right.
And these days, that's not necessarily changed. So it still is the concept of enterprise functionality, the concept of enterprise data. It's sort of the equivalent in the banking industry. The banking industry for years have had this goal that they want to know everything about the customer. So if I call up my bank and I have 2 mortgages and 2 car loans and a credit card, even if I'm calling a division of the bank that has nothing to do with any of that, they realize what kind of customer I am. And that's been elusive to the banking industry. If you've ever called your bank before, they don't necessarily know that. And that also sometimes is true in the investment management industry. We don't necessarily know what's on the other side of the fence. So how do you integrate data? How do you integrate functionality? All with a goal towards a much more enterprise view of the industry. So we still have the drill down, but now we also have an enterprise view. That's definitely a trend that's out there. Another trend that we see out there, of course, and something that's being spoken about at this conference, which is really timely, is just the whole issue of outsourcing. Investment managers looking at what they do for a living and honestly questioning, are there things that we do that really is not our competitive advantage? They're important, whether it's operations or reporting or anything else, but is it really where an investment manager gets their bang for the buck? The other issue from a cost model point of view, if you're servicing 1,000 clients and you have a revenue model built on assets under management and that assets under management drop in value 30%, your revenue drops, but you still have 1,000 clients. So nothing on the operational side changes. As a matter of fact, it probably goes up because you have to hold their hand even more. So a lot of investment managers are at least asking the question, where do we need to keep it in-house because it's a competitive advantage, but where do we honestly get better bang for the buck because we can outsource? So we definitely see outsourcing as a trend. What we don't see yet is the results of that trend. Will a lot of managers make that decision to do it? I think that's still in the throes of decision making. And another trend that we see, which doesn't get a lot of talk these days, is trade processing.
Yes.
Here in the U.S., we have T+2 coming down the road. It's already been initiated over outside the U.S. People think 3 days to 2 days shouldn't be a problem, but there's a lot more paper floating around our industry than I think some people would like to imagine. I'm sure if you go to a major custodian like State Street or BNY Mellon or Northern Trust and you say, do you still get faxes? The answer is going to be yes.
Really?
And do you get a lot of faxes? The answer probably, they'll look around, make sure no one's listening, they'll probably say yes. And of course, you start constricting that time frame to actually settle a transaction, the ability to deal with paper just starts to go away. So I see a reactivation of, to use an abused buzzword, of straight-through processing when it comes to trading. Something that, of course, was a big issue back in the early turn of the century when people were talking about T+1, but I think T+2 is actually going to cause some issues there. A couple more trends that we see out in the industry is, I think, in the alternative space. Alternative investment managers were a minority in the industry for a long time. And now, because of demand by clients for either superior returns or an attempt by a manager to do better risk management, you're seeing what we would consider the traditional institutional investment managers, whether it's a mutual fund company like a Fidelity or an institutional investment manager like a Wellington, getting into the alternative space, which means that you have a lot more investment strategies that are across asset classes. So now, as opposed to the past where our industry was very, I call it positional. So you cared that in your portfolio you owned IBM stock or you owned a New York State municipal bond, and how is that particular position doing? Of course, a strategy could be multiple positions. It could be equity, it could be debt, it could be derivatives, and they're all tied together as a strategy, and we have to be able to monitor that strategy because we care about how the strategy is performing, not necessarily an individual component. And when we trade, we're now trading strategies. We're not just go out and execute a buy of IBM or go out and execute and get me 5 million of this New York State municipal bond. And with the introduction of the traditional institutional investment manager into the alternative space, you see a lot more need for how do I handle? That's a big challenge. How do I handle cross-asset strategy level functionality, whether it's performance, whether it's trading, all the functions that we've always done on a individual position or security basis, we now have to say, how do I do that on a strategy basis? And is it a trend or is it a challenge? Of course, it would not be complete if we didn't discuss regulatory.
Yes.
And I would put it under a trend because by definition, I don't see it lessening. I see it definitely increasing. So we've got a trend of additional regulatory issues, whether it's offshoots of Dodd-Frank, whether it's the continued implementation of LEI or things like that. And the challenge to the investment management industry is how do you avoid all your dollars being sucked up by BAU, business as usual, to comply with the regulatory, and all of a sudden you have nothing left over for the new. And you end up with technology that you want to replace but can't replace from a cost point of view. And I just don't see the trend of regulatory, and when talking to many of our clients, neither do they, the trend of regulatory diminishing, which means that the challenge the investment managers have is, okay, if this is going to be with me for a significant amount of time, the next 5, 6, 7 years at least, how do I make sure that I can balance obliging the regulatory needs with wanting to still invest in the new? And as a matter of fact, I would even say that that is another driver to outsourcing, because if I say, here, you do it, the you do it comes with, by the way, and whatever the regulators need, make sure they get it. Yeah. And now all of a sudden, I don't have necessarily a variable cost when it comes to regulation. I have the fixed cost of the outsourcer, and now I know what I have left over to devote to new. So those are some of the trends that we see correlated with some of the associated challenges that we see out there in the industry.